What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this video is a little bit of a continuation of yesterday's video and really talking about how the shorts are really trying to chase the price down. Now, when we talk about trading, you guys saw me do it today on the morning live stream. You really shouldn't be chasing. You saw me lose on a couple of positions in some trades. We did hit a good one, but in general, trying to chase the price of a stock or an ETF going in any direction usually does not end up well for you. So we're going to go over that piece of it. We're going to be taking a brief look at the option chain as well, but there also is a very interesting new development with what's going on with Citadel that we need to talk about, and I need to make sure everybody is on the same page of how to best approach this. Now, Citadel is getting a lot of heat on LinkedIn right now, and they are also becoming more active on Twitter. We've seen this once before, and we are starting to see it again. So we're going to be covering this entire situation, exactly what we need to be doing to make our efforts the most efficient as we possibly can. We're going to be going over a couple of new terms that not a lot of people may have heard of before, and we are also going to be talking about this Evergrande default and how this could potentially play into what we have going on in our markets and affecting AMC. But again, before we get any further into this video, I tweeted this out earlier. If the last hour and a half of trading during the market hours today tells you one thing, the apes are not leaving. Look at this. We fell all the way down to 25.31 at the low of the day, and we ripped all the way back up to $29. We've been talking about this a couple of times, but the dips that we see below 30 aren't really that long-lived. We've seen this happen once before a couple of months ago, but now with the overall market kind of freaking out coming into the end of the year with potential expediting the tapering process, the potential for rates to be raised a little bit earlier, the debt ceiling fares in this new variant, we are seeing a little bit of market volatility, and I do think we're going to see that type of volatility either in the positive or negative direction going into next week. But again, what this tells us, the apes are not going anywhere. They are buying the dip and holding. So if you guys don't mind, if you guys want to show your support for AMC, make sure you drop an apes not leaving down in the comments. But AMC closed at $29.01, and at the current time that I'm recording in the after hours, it is sitting at around $29, flickering at 29 or $28.99 and 29 right now. Now, when we come over to Ortex, let's refresh this page a little bit really quickly. Utilization 76.66%. I would expect this number to go up above 80, maybe even get to 85 going into next week. But we're not really taking these numbers at face value anymore. We're seeing the days to cover, a really important metric, getting above 2. So when we think about what the shorts have really done over these last couple of trading days, well, we're seeing the estimated short interest go up. Now, when we think about the different ranges that we've had in the past for AMC and potentially where the shorts were adding a lot to their positions, previously it was between that $50 and $60 mark. Now, with the shorts essentially chasing the price down around this $30 mark, well, those averages for where we could see the concentration of short interest in terms of a price level, maybe it's the upper 40s now, mid 40s or even low 40s, and those are prices that we've seen AMC consolidate at or reach up to many times in the past. And the other thing that I want to talk about with you guys is we've seen AMC run from $28 to $52 very quickly. If you remember this previous run up right here, we reached down to a pretty low mark here, it's back here. Sorry about that. So going into August right here, we were at a pretty low mark, and then we saw AMC, it's back here. So we saw the end of August right here, we saw AMC at pretty low levels in that low 30, upper $20 range. Sorry about that, the time frame difference right there. So we see AMC low, and then within a couple of trading days, we ripped all the way back up to 52. So AMC, we know, can rip at any given time. Now, when we're taking a look at the option chain, let's give this a quick refresh as well to get the most up-to-date end of the week numbers. Well, we are seeing a little bit of that double sell. We did see another red day today, so we are seeing the calls get unhedged for, meaning that if they had previously bought shares to hedge the call options that they've sold, well, if those calls run out of the money, they no longer need those shares, so they sell them back on the open market. But the second transaction is, well, there's a lot of puts running in the money too, so they're going to have to go out on the open market and short shares in order to hedge those puts. So we have the sell right here on the calls and the sell right here on the puts. Now, let's get into this Citadel situation situation and exactly what I hope to see everybody doing in this whole situation. So when we come over here, this is going to be Al from Boston's article, I believe. So shout out to Al from Boston for doing this. This is actually a pretty interesting idea. And the premise behind it is that there's going to be a lot of business professionals, investors on LinkedIn. And when you take a look at how many people are following Citadel on LinkedIn, it's about 150,000. So there's going to be a lot of comments here. And I would suggest that a lot of people, if you do have a LinkedIn account, go comment on this post right here or actual Citadel's post. Oh, that's the Twitter. So the Citadel's post right here about their Clubhouse meeting. But there are a couple of key things that I really, really want people to understand. We have heard Ken Griffin many times in the past use the word conspiracy, conspiracy theory, conspiracy theorist to describe the ape community. So what we have to realize is that the way our short interest reporting instructions are set up right now, we are never ever going to know if Citadel actually is the big bad short on AMC. It is very, very possible that in the times of the big run-ups, such as January and June, that in order to facilitate all of those buying transactions, they are using their legal ability to naked short because of the amount of orders that they are processing. But that doesn't necessarily mean that they are the ones naked shorting or really in charge of the potential manipulation of AMC, because that's not something that we can necessarily prove. Does it mean that they aren't? No, it just means that we have to be careful with what we are saying. What I think we should do when talking about this LinkedIn Citadel situation and a lot of these institutions and these investors really watching what Citadel is doing, we can see here that Citadel has 151,000 followers on LinkedIn. I think we should talk about payment for order flow and how it limits price discovery, latency arbitrage, how it does the same thing, how payment for order flow incentivizes these brokers to route to these market makers that could internalize these orders, and how everything is really hurting the market right now. We can talk about AMC and GameStop in these situations, but at the same time, the overall finance industry looks down on us anyway. They're going to sit in their high towers calculating the PE ratios, doing fundamental analysis on companies, and trying to find undervalued companies that they can buy. And as we've gone over many, many times in the past, that's not necessarily the way that a lot of people are investing right now, because the market is changing, but they are still going to look down on us. But if we can provide irrefutable, hard, concrete evidence as to what is exactly going on in our market and potentially Citadel's involvement in this, that could raise a lot more questions and get some more people in the finance industry really in tune with what is going on in our markets right now, because people outside of the ape community really don't know about what is going on. The second thing that we need to go over is this situation right here. This is a tweet from Citadel today. And the comment section on this is actually pretty hilarious. We can't really go through it in this YouTube video because there is some pretty vulgar stuff in there, but congratulations to all our partners who listed on the New York Stock Exchange in November. We're proud to be your designated market maker. So that's a pretty interesting statement and a term that I don't think a lot of people fully understand yet. And it kind of raises the question, well, does AMC have a designated market maker, and is it Citadel? So when we come over to this definition right here on Investopedia, so the key takeaways: a designated market maker is one that has been selected by the exchanges as the primary market maker for a given security. Now, the second part right here, a designated market maker is responsible for maintaining quotes and facilitating buy and sell transactions. Market makers are sometimes making markets for several hundred of listed stocks at a time. Designated market makers on the New York Stock Exchange were previously known as specialists, and designated market makers provide a higher level of service compared to electronic trading. Now, to the best of my knowledge and the research that I was able to do after the market closes today, AMC does not have a designated market maker. So that is not something that we have to be worried about at the current time. Now, let's get into this default crisis that we've been really talking about on this channel for a very long period of time. So the China Evergrande Group. Since September 2021, the group has been diligently reviewing its capital structure and liquidity condition with the help of its financial and legal advisors, evaluating all available strategic options and maintaining ongoing dialogue with offshore creditors. In light of the current liquidity status of the group, there is no guarantee that the group will, so basically basically Evergrande, will have sufficient funds to continue to perform its financial obligations, meaning that they cannot repay its debt. The group is taking a comprehensive view in assessing its overall financial condition, considering the interests of all stakeholders, upholding the principles of fairness and legality, and plans to actively engage with offshore creditors to formulate a viable restructuring plan of the company's offshore indebtedness for the benefit of all stakeholders. That's a key piece right here, restructuring. So they might file bankruptcy, but it doesn't necessarily mean that Evergrande is going to go away forever. They may restructure, and we've actually seen this. We've seen some statements and some rumors that Evergrande is going to be broken up into 3 separate entities by the Chinese government, and the Chinese government's really going to step in and own everything. As of the date of this announcement, the company has received a demand to perform its obligations under a guarantee in the amount of approximately $260 million US. In the event that the group is unable to meet its guarantee obligations or certain other financial obligations, it may lead to creditors demanding acceleration of repayment. Shareholders of the company and other investors are reminded to exercise caution when dealing in the securities of the companies. So what we're looking at here is the Evergrande situation is really kind of coming to a head. Now, there's also Fantasia and some other different property development companies in China that are having issues as well. And we've looked at this in the past that it's not necessarily a kind of real estate problem in China that they're having right now, but it's really the incentives that the Chinese government was giving all of these types of companies, these infrastructure companies after 2008, that really incentivized them to just build and take out as much debt as possible and build as many things that they could. Now, at the time that the debt is coming due, they really can't service the debt and they're having significant issues. Now, is this going to roll over into the US markets? It could, but at the same time, we've seen the reaction that China could potentially take in restructuring Evergrande and really kind of taking over their obligations to really make sure that this doesn't spread. Because at the end of the day, the global economy right now is pretty weak. If Evergrande were to really cause a significant domino effect in the real estate market, that would not be a very good thing to see. And we also know that there are some large institutions in the United States who are bondholders of Evergrande's debt, meaning that some large institutions, I believe BlackRock and potentially Citadel as well. But correct me if I'm wrong. I'm not necessarily sure on the Citadel part, but I do remember BlackRock being on one of the lists that was holding Evergrande debt. They could take some significant losses, and we could see some moves on in our markets just based off of that. So that is mainly going to wrap up this update on AMC, Citadel, and this Evergrande situation. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great day, have a great weekend, and I'll see you guys in the next video.